Welcome all you keen ETF investors to the Daily Horizon View. The date today is the 7th of the 8th, 2019. We will be focusing today on the ASX exchange traded funds, the top fives, the 7 major categories. This will give you an overview of the markets, what's hot, what's not, and what to avoid. Today's spotlight is IRJ, the iShares S&P Small-Cap ETF. That one is brought to you by BlackRock, which is iShares. Stick around to the end. I think it's well worth the time invested. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, everyone, let's have a look at the top 5 percentage rising ETFs today. We saw QCB, OOO, Bear, INES, and DIV. So for those who have forgotten, QCB is the BetaShares Commodity Basket ETF. That one is currency hedged and synthetic. So if you bought that, you would gain exposure to the crude oil index via the S&P GSI Light Energy Index. So, even though the name of this ETF is Commodities Basket, it's just another way to get exposure to oil. This one has a market cap of $8.5 million, and you'll get a healthy dividend here of 9.73%. As I've kind of mentioned before, if you follow these videos, I don't like synthetic ETFs, and also I don't like these commodity type things either. So synthetic and commodities, I'm not really a huge fan of that, so I wouldn't be partaking in a purchase of this ETF. Today we saw a percentage rise of 1.86%, which equated to 15 cents on a pretty healthy volume of 1,100 shares traded. Moving along. Top 5 percentage falling ETFs. We saw QR, GEAR, SLF, CNEW, NVA. So for those who might need a refresher, QR is the ETF's S&P Biotech ETF, and that tracks the S&P Biotechnology Sector Industry Index. We have a market cap there roughly of 5.5 million, so it's a very small ETF as well. So today we saw a drop of 2.69%, which equated to $1.45 on relatively high volume for this ETF of 1,100 shares traded. We're moving right along now for the top dollarizers. We saw IRJ, IJH, OOO, DIV, ETPMPM. So IJR, which is our spotlight, hang around for that. We'll just give a quick overview of what we're going to be looking at now. IJR is the iShares S&P Small-Cap 600 ETF. So the fund seeks to track the investment results of the S&P Small-Cap 600 index. Got a market cap of $190 million. Get me decimal points organized out there. We have a dividend yield of 1.27% roughly when I checked today. We saw a rise today of 51 cents, which equates to 0.46% on pretty low volume of 942 shares traded. Stick around for the end. I'll break that one down a bit further. I actually like this one, so stick around. So top $5 falls for the day. So the ETF that fell the most with respect to the dollar value. Number 1 there, we saw IHVV, followed up there by ETPMPT, then VAP, then QR, then IKO. So for those who have forgotten, IHVB is the iShares S&P 500 AU hedged ETF. represented by an index composed of the large cap US equities. So obviously, as it says in the box there, it tracks the S&P 500, and this is a hedged to the Australian dollar. Market cap of $166 million. Dividend yield, roughly when I checked last, was 2.8%. Morningstar have the highest rating here on this one as gold. So this, with respect to a star rating, would be 5 out of 5 stars. Today we saw a fall of $3.01, which equates to 0.8%. On a pretty low volume here of 791 shares in this ETF traded today. Not much to see there. So top 5 number of trades we can see here: VAS, STW, VAP, VGS, IVV. So no major surprises here. These guys are all the big end of town with respects to ETFs. So VAS is the Vanguard Shares Index ETF. This one tracks the S&P ASX 300. We've got a market cap roughly here of $3.5 billion. Pretty healthy dividend yield here of 4.45%. Morningstar rating of bronze, which equates to 3 out of 5 stars. Not a bad ETF if you're looking for exposure to the top 300 companies in Australia. Number of trades here, we saw a pretty high number, actually 350 on the downside, so quite possibly people looking to move money out of it. This ETF, there's been a lot of money moved into this ETF recently, but for whatever reason, people trying to cycle out. So we saw a drop in the share price of 90 cents, which equates to 1.05%, as mentioned there, total of 305 trades. Top 5 of volume, we saw AAA, OOO, STW, MVW, and HACK. AAA is one that I kind of keep mentioning all the time. It's one of those usual suspects. So BetaShares, AAA, I should say, is BetaShares Australia High Interest Cash ETF, and this one operates by having high interest deposit accounts in Australian banks such as ANZ, CBA, NAB. You've got a market cap here of $1.4 billion, rough dividend yield here of 2.03%. Morningstar give this one a neutral rating, which is effectively 1 out of 5 stars. The reason this one's so popular is it's a good way, or sorry, a good place to park your money instead of the bank, or it's another option, I should say. And that's why this one's so popular. We saw today, volume-wise, 149,300 shares traded or thereabouts. On the upside, marginally, because of the 1% rise in the share price, which equated to 0.02%. So yeah, as mentioned, I think that one's quite popular because it's an alternative to having your money in the bank and getting 1%. So your top 5 for value, we have STW, AAA, VAS, VAP, IVV. STW, which you've mentioned a few times before, is the State Street Spider S&P ASX 200 fund, designed to give you low portfolio turnover, accurate index tracking, and that all should equate to low costs. We can see a market cap here of roughly $3.7 billion. We'll get a pretty healthy dividend yield of 4.36% or thereabouts when I checked it last. So Morningstar give this one a rating of bronze, which equates to 3 stars out of 5. This one's quite a popular fund, but they've recently, also some of the other funds have recently reduced their fees. So this one's losing a little bit of support, and then people moving their money into other cheaper funds. But let's have a look at the value here. We saw $1.8 million traded today. That equated to on the downside, So it looks like people trying to get money out, which equated to an 80-cent loss in the share price or 1.28%. So yeah, let's move along. So let's have a look at the spotlight now, which is IRJ, and that is the iShares S&P Small-Cap ETF. So the fund seeks to track the investment results of an index composed of the small-cap US equities. So the index here is the S&P Small-Cap 600. So it contains stocks which meet market capitalization requirements and are selected for liquidity and industry group representation. So typically, from memory, the small cap criteria is stocks or companies valued below $2 billion. So I suppose in relative terms to Australian market, there's still, most of those companies are still quite big. Why would you bother buying it? Because it gives you, number one, it gives you exposure to small cap companies in the United States, low costs, access to specific segments of the US market. So as mentioned, those small companies. So you can use it to diversify internationally and seek long-term growth opportunities in your portfolio. We'll talk a little bit more about that in a second. Move on. Click through all this stuff. We can see closed out yesterday with an SAB of $112.95, down today at $112, I should say, and 53 cents. Market cap of a little over $190 million. Very, very, very reasonable management fee here. Probably one of the lowest ones going around for any ETF. Yeah, you're looking at 0.07%. I think that's actually reasonable when you look at this. It's a cross-listed ETF, so which means they don't physically own all the shares in Australia. They just buy the corresponding ETF in the States. So I think that management fee is pretty reasonable. You'll get a quarterly dividend here of January, April, July, October. A small little trickle of dividends. I'd say you get 1.25%, which is not much to write home about. But for this one, you're in it for the share price appreciation. So you want the value of your ETF to go up, not necessarily in this one for the dividends. So there may be a case for inclusion of an ETF like IGR in a balanced portfolio due to a higher rate of potential return. So, you know, as just mentioned, we're looking for these ones to go up. So in America, between 1926 and 2006, small cap stocks outperformed the large cap stocks by an average of 2.3% annually. So that's, you know, intuitive, I suppose, because those smaller caps should be growing at a faster rate. So a bit of an example here. So if you've invested $10,000 for the 30-year period, earning your 10.4%, which is a long-term return for the S&P 500 over the period between 1926 and 2006, your $10,000 would turn into $194,000. But, you know, if you actually put your money in the investment and you would have been earning a 12.7% compound average annual return, which is what the small cap stocks returned over that period between 1926 to 2006, your $10,000 would have grown into a very, very healthy $361,000 over those 30 years or 3 decades. So the difference in that 2.3% is quite significant, and that just sort of shows you the power of the compounding and having your money put into different places, I suppose, to see if you can extract some extra value from different parts of the market. I think there's definitely a place for small caps in your portfolio. I'd also have a look at IJH, which is effectively IJR's, I suppose, cousin or brother, I suppose. That one looks at the sort of mid-range size companies. See, there's quite a few good companies in that one. Also, have a look at VSA, which is Vanguard Small Opportunities Fund. Let's flip through and have a look at some graphs. So you can see the graph here on the right-hand side. So your hypothetical growth for your $10,000 investment at the end of 2000, you just be ticking along just below your 20 grand up until sort of late December 2011, and after that things have taken off, the market's turned around, and that's the last 9 years is where you pick up most of your gains here. So your 10,000 would turn into just under 50 grand there. So you're looking at a return of a cumulative return of over 385%, which isn't too bad for your 10 grand investment. I've never ever seen any of these companies because they all sit at that small end of the American market. So, I don't really know anything about these companies offhand. They look like a lot of tech companies and bits and pieces as well. So definitely that's where, you can get your good exposure, possibly better opportunities to invest in this ETF as opposed to, say, on the Australian market. This one gives you a basket of 600 of those smaller companies. So out of those ones, hopefully you're going to get some good returns. So just, opportunity to boost up your returns by investing a few grand in something like that. So definitely, as you build up your portfolio, these are things to think about adding on as you go along. But I wouldn't use these as the core component of your portfolio. These type of ETFs are something that you add on later for, effectively your cherry on the top. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.